Afternoon. I'm Dean Heskin, President and CEO of Swiss America Trading. And I have with me Dr. Jerome Corsi. How are you today, Jerry?
I'm great, Dean. It's good to be back with you. Thank you.
Nice being with you. Today's date, January 25th, 2022. It's hard to believe we're almost a month through the year 2022 already.
It's amazing. It's going very, very fast. And it's good because it's winter here in New Jersey, and I'm happy to see it go.
Well, we're in Scottsdale, so we have had some cold weather, but we would like it to kind of slow down a little bit so we don't have to go rushing into the summer. Well, anyway, today, Jerry, as you and I have been discussing, we'd like to talk about, is the stock market in a bubble? And that's been a big topic on all major networks recently, all throughout the news. Many analysts out there discussing, what the valuations are in fact all the equities out there overvalued, and what could we expect to see? In preparing for this, and based on some of your and my discussions, I took a look at good old trusted Investopedia to see, what exactly, but in true investment terms, would qualify as a bubble. And I found it very fascinating. They broke it down into 5 stages of a bubble. And those 5 stages, the first that they recognize is what's referred to as displacement. They call it the new paradigm. And what that basically means, Jerry, is like when rates go from 5% to 2%, it just creates this energy out there where people say, okay, look at how cheap money is now. Let me go out there and start investing. Let me start buying things, et cetera. And I think clearly we've bore witness to that over the last several years. The second then being the boom, which is just the natural byproduct of that displacement, where now all of a sudden people start taking a look around, they see a rising stock market. We've seen the same with real estate here recently as well. And they say, you know what, this thing is starting to go, I better get going. And hence there's your boom. Third point is the euphoria. And euphoria, pretty self-explanatory. As more people are getting in and the markets continue to rise, people just get caught up or swept up in that, and they think it's something that'll never go away. And I do believe we've also bore witness to that as well. Then as they start getting towards 4 and 5, as we're discussing a bubble, and a bubble, would suggest at some point it might burst or break. Then we start seeing, for the smart money, profit taking, where now all of a sudden some of the smart people out there say, you know what, nothing does go up forever, and now it's time to start taking some of my chips off the table. And we've heard a lot of that recently, and a lot of the news networks and a lot of the markets in the real estate market, the stock market, where some of the smart money out there is taking a hard look at maybe pulling a little bit back. Finally, the fifth thing, which certainly we're not there yet, but it's when that panic hits. And when that panic hits, that's that proverbial bubble that we're looking to, or we will expect to see pricked or burst. And then that's when the fallout happens. So, I thought it to be a very, very good and very simple explanation of what a bubble is and what it looks like. And I thought it to be also very apropos for what we've seen going on in our marketplace over the last several years. What's your thoughts on that, Jerry?
Well, I agree, Dean. I've been following for a long time Jeremy Grantham, who is famous for being able to call market bubbles, and he's been predicting for about a year that there's going to be a dramatic historic crash, a plunge of the market, almost 50% in the stock market. And he is basically saying that, this would be jaw-dropping if you had some of the indexes going down by half. And what he's arguing is that we put so much money, this surplus money, government spending, just money we don't have in taxes, into the economy for various reasons, including the pandemic, trying to recover from the pandemic, keeping the economy going in lockdown, that it's a bubble, that the values are really inflated. And this last week, I was thinking hard about this because, there were dramatic drops of the stock market, 1,000 points. And then I'm sure the plunge protection team of the Federal Reserve got in there to try to stem the selling. But the problem, Dean, is in a bubble, if you don't get out first, you might lose just about everything. The only people who get out first, because the market can go down so fast that you either have to hold and wait for it to come back, or if you try to sell in a declining market fast, you're going to take big losses.
Sure.
And I think we're headed to that right now.
Yeah, you're absolutely right. Certainly you don't want to be the last one out of the declining market. That much is for sure.
Yeah, you sure don't. I mean, that brings back memories of, thoughts of all the various crashes we've had and people virtually losing everything. But if he's gone through his checklist of the different phases, and as he watches these markets, Grantham, he's really saying that this looks like some classic crashes. He's pointing to, for instance, Japanese stock bubble in the late 1980s in the real estate market, also bubbling at that time. He's talking about the recent bubble we had in 2008, 2009, with the real estate market, with the subprime real estate market. And these bubbles happen fast. But if you take a look at the values of what's been going on, I think we just see this fiat currency has a tendency to produce this enthusiasm. The values are going up because there's more money being pumped into the economy by the government, largely, not because of economic growth, not real economic growth. And bubbles are very, very difficult to live through. And I think one is coming.
Well, and I'm familiar, with Jeremy Grantham, and you're absolutely right. He's at 83 years of age. He's been in the investment business for 50 plus years, I believe.
Yep.
And certainly he's seen a lot. And he wouldn't be the first person to caution people as to a bubble being out there, and not to say that he has the ability to predict the future any better than the rest. But to your point, he's sourcing that to actual recent events that we've seen in your and my lifetime that unfortunately there seems to be a very strong parallel there to what we see happening today and what has happened in some of these other situations.
Well, he's also saying that the holding gold and silver is going to be one of the only ways he sees to ride out the bursting of this bubble. He's saying even the traditional idea of 60-40 portfolio of stocks offset by bonds is just going to be absolutely useless in this market when the bubble bursts. So he's I don't think I've seen Grantham be this confident that we're in for a major crash, not even an adjustment, a crash. And what I've seen in the stock market over the past few days affirms that I think there's good reason to pay attention to Grantham this time.
Right. And, I've been in the metals business now, Jerry, for 30 years. And especially when I first got into this business, it used to be that you were either pro gold or pro stocks or pro real estate, pro bonds, or, everybody had their own little corner. And, just for the listeners out there, first off, myself, I know yourself, Swiss America, the hope is not that our stock market has any kind of hiccup or any kind of a burst, if you will. It's just actually looking at the fundamentals that exist in that marketplace and where, potentially there could be some problems there. I personally do have stocks that I hold. I have it in my retirement as well. But the key with this is I have a very good representation of other markets as well. Real estate, I do have my physical precious metals. And the unfortunate thing is, again, in nearly 3 decades now of doing this in this business, the average person out there, the average investor, is just not well versed in what it is that they need to do to get it, or what it looks like to become involved in physical metals. And that's something that, that's why these podcasts, I think we're trying to just get some information out there that might just give a little different perspective, maybe a little different slant on things to maybe open people's eyes up to, we're not suggesting you and I, hey, the market, there's a bubble out there, or Jeremy Grantham, cash everything in and head for the hills, but, maybe take 10, 15, 20% and put that into some metals. In fact, for those listening to this podcast, if they go to our website, swissamerica.com, or call our 1-800-289-2646 number, and they can ask for the Swiss America Silver Report. There's no obligation, there's no commitment to it, but with that report, it's just a good breakdown of what the physical silver market has done, how you can get involved in it, and why some of the reasons that you might expect it to perform over the next several years. And I encourage anybody listening to this to do that. So anything additional you'd like to add, Jerry?
Well, I just want to, in conclusion, say I think the best ability to analyze stocks is unemotional. I mean, it's not preferences or just the laws of economics apply. And I think what Grantham is saying is that we're in an unusual situation with the amount of federal surplus money that we have fiat created in the last few years coming out of this pandemic. And it has created a bubble. And I see the conditions there. And I agree with you, Dean. I think that there's time and value for all different kinds of investments. And I do encourage people to contact Swiss America. You'll get very good professional advice in an unpassionate way, just plain analytics as to where the market's headed and what the opportunities are for precious metal investing. And I do recommend it in this period of time.
Well, I agree. Obviously, I agree, but thank you. Well, thank you all for tuning in and listening to this episode of Corsi's Corner. Again, my name is Dean Heskin, President and CEO of Swiss America, and we encourage you to please contact us if you have any questions or if you have any comments. We'd love to hear them and look forward to the next opportunity we have to meet with you again. So thank you so much. Have a wonderful rest of your day.